You know, I've spent over 70 years watching how people make and lose money, and I can say one thing with absolute certainty. Most people are doing everything wrong. They're chasing the wrong places, listening to the wrong people, and most importantly, making too much noise when they should be quiet and working. Let me tell you something I've learned over decades, alongside Warren Buffett at Berkshire Hathaway. True wealth doesn't come from strokes of luck. It doesn't come from hot stock tips, and it definitely doesn't come from jumping from one opportunity to another like a scared rabbit. True wealth comes from something I call a silent strategy, and that's exactly what I want to talk to you about today. When I was young, I worked as a lawyer. I earned well, very well, by the standards of the time, but I noticed something while observing my wealthiest clients. They weren't necessarily the smartest. They weren't the most charismatic, and they certainly weren't the ones who boasted the most about their achievements. They were for the most part discreet people who did their work consistently, day after day, without fanfare. The first thing you need to understand about the silent strategy is that it goes against everything modern society teaches you. We live in an era of constant self-promotion, where everyone wants to show off their success on Instagram, on Facebook, everywhere. People want everyone to know they're making money, that they're successful, that they're living the great life. This is a terrible mistake, and I'll explain why. When you keep boasting about your success, three bad things happen. First, you attract envy, and envy is one of the most destructive forces in human relationships. Envious people won't help you, they'll sabotage you. Second, you create unrealistic expectations about your life. Everyone will expect you to always be on top, always winning, always shining, and when things get tough, and they will, you'll feel pressured to keep up appearances. Third, and perhaps most importantly, you waste time and energy on things that don't matter. Every minute you spend posting about your success is a minute you're not working to create more real success. I learned from Warren that patience is the most underrated virtue in the world of investing and business. Everyone wants to get rich quick. Everyone wants to find that stock that will multiply tenfold in 6 months. But you know what really works? Buying good companies at reasonable prices and holding them. Holding them for years. Holding them for decades if necessary. Letting the power of compound interest do its work silently, without you poking at your portfolio every day. If you invest that money consistently, choosing good companies or index funds, and achieve an average return of 10% per year, do you know how much you'll have at 65? More than $6 million. $6 million. And that's without any magic tricks, without any secret formula. Just consistency, patience, and the silent magic of compound interest. But here's the problem. Most people can't do that. They start investing, and after a few months, they get impatient. The market falls a little, and they sell out of fear. Or the market rises, and they get euphoric and put all their money into a trendy stock that some internet influencer recommended. They don't understand that true wealth is built quietly, away from the spotlight, without drama. Another fundamental thing in the silent strategy is living below your means. I know, it sounds boring. Everyone wants the new car, the bigger house, the exotic vacations. But let me tell you a secret. Real millionaires, those who have built lasting wealth, don't live like millionaires until they have so many millions that it doesn't make a difference. I've met countless successful entrepreneurs and investors throughout my life. Do you know what most of them had in common? They drove ordinary cars, lived in comfortable but not ostentatious homes, and didn't spend money trying to impress people who didn't even care about them. They understood that every dollar spent on unnecessary consumption was a dollar that wasn't working to create more wealth. Warren still drives around Omaha in the same modest lifestyle he had decades ago. He lives in the same house he bought in 1958. And you know what? He's much happier than most young executives who go into debt up to their necks to buy a luxury car and impress the neighbors. Why? because he's not stressed trying to maintain a facade. He's free to do what he loves. Think, read, invest. Real financial freedom doesn't come from how much you earn. It comes from the difference between what you earn and what you spend. You can earn $200,000 a year and be poor if you spend $210,000. Or you can earn $60,000 and be rich if you spend only $40,000 and invest the difference intelligently. It's simple math, but most people can't execute it. Now, let me talk about one of the most important parts of the silent strategy, continuous education. I read every day. I read for hours. I've always read. And I'm not talking about reading novels or tabloids. I'm talking about reading things that expand your understanding of the world, that make you wiser, that give you mental tools to make better decisions. Warren says he spends 80% of his day reading and thinking. 80%. And people think success comes from working 12 hours a day doing tasks non-stop. No, success comes from thinking better. It comes from making better decisions. And you can only do that if you constantly feed your mind with quality knowledge. But here's the key: do it quietly. Don't post pictures of the books you're reading. Don't brag about how many pages you read today. Just read, absorb, learn, and apply. Let your results speak for you, not your words. People will notice that you're making better decisions, that you're thinking more clearly, that you're having more success. They don't need to know that you've spent the last 6 months reading 3 books a week. Another crucial aspect is choosing your battles and your partners wisely. I always say, show me who you hang out with, and I'll tell you who you are. If you spend time with people who live beyond their means, who are always complaining, who are envious of others' success, you will absorb those behaviors. It's inevitable. But if you surround yourself with people who think long-term, who value learning, who celebrate the success of others because they know that success is not a zero-sum game, you will grow. And you don't need to announce these friendships. You don't need to post on LinkedIn about how you're networking with successful people. Just build genuine, quiet relationships with people who make you better. One of the questions I get asked most often is, how do you choose good companies to invest in? And my answer always frustrates people because it's too simple. Choose companies you understand, that have a product or service that will likely be in demand 20 years from now, that are run by honest and competent people, and that are being sold at a reasonable price. That's it. There's no secret. But people don't want that answer. They want a complicated formula. They want sophisticated technical analysis. They want charts and indicators and systems. Why? Because it looks more professional, more impressive. But ultimately, the best investments Warren and I made were based on this simple logic. We bought Coca-Cola stock because we knew people would continue drinking Coca-Cola. We bought insurance companies because we understood the insurance business. There was no mystery to it. And here's another important point. Don't try to predict the market. I've seen so many smart people lose fortunes trying to guess whether the market would go up or down next month, next quarter. It's a total waste of time. Nobody knows where the market is going in the short term. Nobody. Anyone who says they know is lying or fooling themselves. What you can do is invest in good companies and hold on. When the market falls, and it will fall, don't panic. In fact, if you have cash available, it's time to buy more. Warren Buffett has a wonderful phrase, be greedy when others are fearful, and fearful when others are greedy. It's counterintuitive, but it's absolutely correct. During the 2008 crisis, while everyone was panic selling, we were buying. We bought shares of excellent companies at ridiculously low prices. And we did it quietly, without fanfare, without having to tell anyone how smart we were. We just executed our strategy and let the results appear in the following years. Speaking of crises, another essential part of the quiet strategy is having an emergency fund. I know this isn't exciting. Everyone wants to put every penny to work investing. But having 6 months to a year's worth of expenses saved in a safe and liquid place gives you something that money can't directly buy: peace of mind. When you have an emergency fund, you don't have to sell your investments at a bad time because you lost your job. You don't have to accept a terrible job because you're desperate. You don't have to panic when your car breaks down or an unexpected medical expense arises. You have room to breathe, to think, to make rational decisions instead of emotional ones. And that, my friend, is a huge advantage. Most people live on the financial edge. One unexpected problem and the whole house of cards collapses. They are forced to sell assets at the worst possible time, to accept terrible loan terms, to make bad decisions because they are under pressure. Don't be that person. Now, let's talk about something people generally don't like to hear. You'll probably need to work hard for a long time. There's no such thing as a free lunch. There's no real shortcut to sustainable wealth. Yes, some people win the lottery or inherit fortunes. But for the vast majority of us, building wealth means working smart and consistently for decades. The good news is that if you choose a job that genuinely interests you, it won't feel like a sacrifice. I never felt like I was working when I was solving complex problems or analyzing interesting businesses. Warren says he jumps out of bed every day excited to go to work, even at over 90 years old. Why? Because he loves what he does? So part of the silent strategy is to find something you're good at and that you enjoy enough to do for a long time without burning out. And when you find it, just do it. Don't keep talking about doing it. Don't keep planning to do it someday. Don't keep waiting for the perfect moment. Just start and keep going. Another thing, learn to say no. This is an incredibly valuable and incredibly rare skill. Most people say yes to everything. Yes to projects that don't make sense. Yes to dubious investment opportunities. Yes to social commitments that drain your energy. Yes to unnecessary expenses. Warren and I are known for saying no. We say no to most things. Why? Because our time and energy are limited, and we want to use them only on the things that really matter. I don't need to go to every party, every networking event, every conference. I don't need to invest in every company that seems promising. I can be selective, and you can too. Every yes you give to something non-essential is an implicit no to something that could be really valuable. So be discerning, protect your time, your energy, your capital, and do it quietly, without having to explain or justify it to everyone. A simple no is enough. Let me touch on a delicate point: the issue of ego. Ego is the enemy of wealth. When your ego is in charge, you make decisions based on how they will make you look, not on whether they are smart. You buy things to impress people. You take unnecessary risks to prove you're smart. You refuse to admit mistakes because it would hurt your pride. I learned a long time ago to put my ego aside. I've made many mistakes throughout my career. Many. And you know what I do when I realize a mistake. I admit it quickly and correct course. I don't try to justify the bad decision. I don't blame others. I don't dwell on it. I just acknowledge it, learn from it, and move on. Warren often says that when you realize you're in a hole, the first thing to do is stop digging. It seems obvious, but you'd be surprised how many people keep digging because they're ashamed to admit they started digging in the wrong place. Put your ego aside, be humble, be willing to be wrong. This will save you from losing a lot of money. Now, something I consider fundamental: have a system, not goals. Goals are good for giving direction, but systems are what actually get you there. Let me explain. If your goal is to have $1 million, that's just a number in your head. But if you have a system of saving 20% of every paycheck you receive and automatically investing that in index funds, that system will inevitably lead you to wealth. The problem with goals is that they can be discouraging. If you want $1 million and only have 10,000, you might feel so far away that you give up. But if you have a system that you consistently follow, You simply wake up every day and execute your system. You don't need to worry about how far you are from the end goal. Just follow the process, and the result takes care of itself. And here's the beauty: you can do it silently. You don't need to announce your financial goals. You don't need to tell anyone you're saving 20% of your income. Just set up your system, automate what you can, and let it run in the background while you live your life. Speaking of automation, this is a powerful tool in the silent strategy. Set up automatic transfers to your investment accounts. Set up automatic payments to your bills. Set up as much as possible so that it works on autopilot. Why? Because it removes the need for willpower and constant discipline. Willpower is a limited resource. You don't want to spend your willpower every month deciding whether or not to invest, how much to invest, where to invest. Decide once, set up the system, and let it work. Your financial life will improve dramatically, and you won't even need to think about it most of the time. Another important aspect: diversify, but don't overdo it. There's a famous quote that says diversification is protection against ignorance. If you truly understand the businesses you're investing in, you don't need 30 or 40 different stocks. Warren and I had most of our wealth concentrated in a few investments that we truly understood deeply. But here's the crucial point: truly understood. If you don't have the time or interest to study individual companies in depth, then a broadly diversified index fund is probably your best option. There's no shame in that. In fact, it's a smart and humble choice to acknowledge the limitations of your knowledge and time. What you shouldn't do is buy a bunch of different stocks because you heard good things about them, or because some analyst on television recommended them. That's not diversification, that's confusion. You end up with a portfolio you don't understand and can't manage properly. Have fewer investments that you truly understand, or have a simple broad index fund. One of the two approaches works. Trying to do something halfway usually doesn't work. I'm going to share something that isn't talked about much: the value of reputation. Your reputation is your most valuable asset, and it takes decades to build, but can be destroyed in minutes. In the world of business and investing, nothing is more important than being known as someone honest, trustworthy, and who keeps their word. I've always operated on a simple principle: I'd rather lose money than lose my reputation. And you know what? Over time, this principle has made me more money, not less. Because people want to do business with someone they trust. They're willing to give you better terms, better opportunities, more chances, and build that reputation quietly. You don't need to keep talking about how honest and upright you are. Just be it. Your actions will speak for you. Keep your commitments. Treat people with respect. Be fair in your dealings. Over time, your reputation will spread, and doors will open without you having to push them. Now, let me address a topic that many find controversial. Don't worry about trying to win the last dollar. When you're negotiating, whether it's a company purchase, a stock sale, or any transaction, don't be greedy to the point of ruining the deal. If something is fair to both sides, close the deal and move on. I've seen so many deals fall through because one party wanted to squeeze in another 1 or 2%. And you know what happened? They didn't get that extra 1 or 2%, they got nothing. And often they missed the opportunity to do other business with that person in the future. If you are fair, reasonable, and easy to deal with, people will want to do business with you repeatedly. You will have access to more opportunities. You will build long-term relationships that are far more valuable than optimizing each individual transaction down to the last cent. Think long-term, always. There's a concept I call a safety margin, and it's absolutely fundamental. Never invest to the limit. Never go into debt to the maximum you can afford. Always leave room for the unexpected, because the unexpected always happens. If you think you can afford a $2,000 monthly payment, buy something with a $1,500 payment. If you think a stock is worth $100, Only buy it if it's at $60 or $70. If you think you can work 50 hours a week indefinitely, organize your life to work 40. Leave room for error, for change, for life to happen. This safety margin protects you from ruin, but more importantly, it gives you peace of mind. And when you have peace of mind, you make better decisions. You don't act out of desperation. You don't panic sell. You remain rational when everyone around you is losing their minds. I'm going to touch on something that may seem obvious but is often overlooked. Take care of your health. Your physical and mental health are the foundation of everything. You can have all the money in the world, but if you're sick or exhausted, none of that matters. And more pragmatically, health problems are incredibly expensive and can destroy your financial progress. So get enough sleep, exercise regularly, eat reasonably, manage your stress. These aren't optional things if you're serious about building long-term wealth. They're investments in the most important asset you have, yourself. And again, you don't need to advertise it. You don't need to post your workout routine or your meals on social media. Just take care of yourself quietly, consistently, and let the benefits show in your energy, your mental clarity, your ability to work effectively for decades. Another important lesson: don't try to time your life. People are always waiting for the perfect moment to start investing, the perfect moment to change careers, the perfect moment to start a business. Let me tell you a secret. The perfect moment doesn't exist. The best time to start is now, not when you have more money, more knowledge, more confidence. Now. Start small if you need to, but start. Action generates information. Experience generates wisdom. You will learn more by doing than by planning eternally. I see so many people paralyzed by analysis. They want to be absolutely certain before making any financial decision, but absolute certainty doesn't exist. At some point, you need to make a decision with the information you have, act, and adjust as you learn more. This is much more effective than waiting until you have all the information possible. Now, something that is perhaps the most important of all: learn to be happy with less. I'm not saying to be miserable or deprived. I'm saying that your happiness shouldn't depend on increasing levels of consumption. If you need a more expensive car every 3 years to feel good, a bigger house, more extravagant vacations, you're on a never-ending treadmill. Learn to find satisfaction in simple things: a good book, an interesting conversation, a walk, time with the people you love. These things are practically free, and they are also the things that truly matter in life. If you can be happy with a relatively simple lifestyle, you gain enormous financial power, because the difference between your income and your expenses can be huge, and that is true freedom. It's not having enough money to buy everything you want. It's wanting so little that the money you have more than covers it. It's waking up and knowing that you could stop working tomorrow if you wanted to because your expenses are low and your investments are substantial. That's the real goal. I'm going to share something about tax that many people don't properly understand. Tax is not the enemy. I pay a fortune in taxes every year, and you know what? I'm happy to pay. Because paying a lot of tax means I'm making a lot of money. It's a good problem to have. What you shouldn't do is let tax considerations completely dictate your investment decisions. Yes, minimize your taxes within the law. Use tax benefit accounts when available. Be efficient, but don't hold on to a bad investment just because you don't want to pay capital gains tax. Don't let the fact that you'll have to pay taxes later prevent you from making a good investment. Think of taxes as the cost of doing business in a stable country with laws that protect private property and contracts. It's a price worth paying for the privilege of being able to build wealth in the first place. There's something else I want to talk about: the importance of finishing what you start. Many people jump from project to project, from idea to idea, always looking for the next big thing. But real wealth usually comes from taking a good idea and executing it to the end, adjusting and improving along the way. If you started investing in index funds, keep going. Don't keep jumping to individual stocks, then to cryptocurrencies, then back to real estate. Choose a solid strategy and give it enough time to work. Consistency almost always trumps genius. And when you inevitably make mistakes, and you will, learn from them, but don't let them paralyze you. I've lost money on several investments over the years. Some were errors in judgment, others were just bad luck. But each one taught me something, and in aggregate, over the decades, the successes have far outweighed the failures. The key is not to bet everything on a single thing, not to put all your eggs in one basket so that one mistake can destroy you, but also not to be so afraid of making mistakes that you never take any action. It's a balance, and you develop the sense for it with time and experience. Let me talk about something people often neglect: the value of boredom. Building wealth is often tedious. It's doing the same thing over and over again. It's saving month after month. It's reviewing your investments occasionally but mostly ignoring them. It's living within your means consistently. It's not exciting. It doesn't make for dramatic stories to tell, but it works. And the reason most people don't get rich isn't because they don't know what to do. It's because they can't tolerate the boredom of consistently doing the right things long enough. They need excitement, novelty, drama. So they speculate, they take risks, they try lucky breaks, and most of the time it doesn't work. Learn to embrace boredom. Learn to love the routine of repeatedly doing the right things. That's where true wealth is built. Now, as for the silent strategy itself, its essence is: do the work, not the marketing of the work. Build real wealth, not the appearance of wealth. Be patient, be consistent, be discreet. While everyone else is shouting about their accomplishments and trying to impress others, you are quietly building something substantial. And when you get there, and you will, if you are persistent and smart, you will discover something interesting. You won't feel the need to tell anyone. Because true wealth gives you something that money itself can never buy: freedom. Freedom to choose how to spend your time, freedom to not have to impress anyone, freedom to be yourself. That is the ultimate reward of the silent strategy. It's not the money itself, although money is nice and useful. It's the peace of mind that comes from knowing that you've built something solid, that you owe nothing to anyone, that you can look in the mirror and know that you did it the right way, step by step, without shortcuts, without deceiving anyone, without compromising your values. So my final piece of advice is: start today. Not tomorrow, not next week, not when you earn more or learn more. Today. Do one thing, just one, that moves you in the right direction. Open an investment account. Increase your savings rate by 1%. Read a book on finance. Cancel a subscription you don't use. Do something small, but do it. And then tomorrow, do another small thing, and keep doing it, silently, consistently, patiently. 10 years from now, 20 years from now, you'll look back and won't believe how much you've progressed. And the best part? You will have done it your way, in your time, without needing anyone's approval or validation. That's the silent strategy of millionaires, and it works. I know because I've lived it. I hope you will too. Subscribe to the channel so you don't miss any videos. See you soon.